Hello guys, welcome back to the channel. Today we'll be checking out the simple trend following strategy using the moving average and also the parabolic SAR. This strategy will be used in the 1 hour or 30 minutes charts. It is very effective based on my back test, but a word of caution, it is much more safer to use during trendy periods. What do I mean? Times that the market normally trends are during the London Open and also the New York Open. So it's good, and this strategy will be very effective if it is used within that time period. So now, one more word is that if you do enjoy this type of content, please like, subscribe, drop your comments below to tell others how effective you have found this strategy to be in. So without much further ado, let's get into it. First, we'll start off putting the first moving average. First moving average is the 50. I'm going to make it the, let's say, red color. 50 period exponential moving average, red. Go back. Then the next will be the 25 moving average. We're going to make that one green. The next and last moving average will be the 10 moving average. I'm going to make that one gold or yellow, whichever one you prefer. And then the last indicator will be the parabolic SAR. We're going to leave it to default settings. Color will be green. So then, what are the trade? What are the market moves that we're expecting before we take any trade? That long go by. Well, it is very simple. If we are looking for a long entry, we are first looking for parabolic SAR to show us a change in the trend movement. We are seeing that there's a change, is signifying an uptrend. Then we have the golden moving average, which is this one, crossing above the two other moving averages, going to the top. So we first will have the parabolic SAR signifying a change in the trend direction, and then we also have the golden or the 10 moving average moving upwards. The 10 moving average will be our signal to enter the trade into the top. Well, our stop loss will be as usual below our swings. This is the perfect position to put, because this is a previous place the market has tested that place. So if the market moves against you, then it's just better to get off the trade. It will be safer. It will be safer like that. So you put your stop loss below the swings and get into the trade here after maybe a confirmation of this candle. So, and the beauty of this parabolic SAR is that we can use it as a trailing stop. So therefore, if we use this parabolic SAR as a trailing stop, and this is the last place, this is the last dots that we have. Well, if our stop was right there, that will give us about 94 pips. That is a very beautiful risk to reward ratio right there. Well, let's look for nice short setups. Again, we have a change in trend going downwards. Then we see the golden or the 10 moving average crossing the two moving averages to the downside. We enter this, and if we are using the parabolic SAR as our trailing stop, if we place the trailing stop on the last dot, that will give us about 45 pips. That is very beautiful. Again, during this period, I advise you not to trend. Why? Because at least in the place that from the country I'm living in, this period is the Asian market, meaning that the London and the New York markets are closed. Therefore, it's advisable not to trade during this period because there is not a lot of market volatility. So therefore the market is in a range, and remember, this is a trend following strategy. That is the primary aim of this strategy, is to capitalize on whatever trends we see. We will see a trend developing, get in as soon as possible, and the moment we have any indication that this trend is coming to an end, we get out. We have another beautiful example here. We already have the parabolic area from the top giving us an indication of a change in trend direction, and we already have the golden moving average below the 25 and the 50. Perfect opportunity to enter. And if we used the parabolic ACR as our trailing stop, that will give us about 95 pips. If we entered here, the perfect place to put our stop loss will be above the swings, possibly here, or you could place it above the 50. You could place it above the 52. It's a relatively simple trading strategy that is very effective, since and it has a higher rate of winning. Why? Because he's using the higher time frames, meaning it cuts out much of the noise that we have in the market when you are using the smaller time frames. You are using larger time frames, which means it gives you much more clarity overall on what is going on in the market. It's a very simple strategy. I love you guys to back test it first. Don't ever use anything you haven't tested on the real account. Back test it to know if it's legit, to know if it's work for you, to know if it works according to your trading style. Well, those are my thoughts on this strategy. Please do like, if you do enjoy the content, please do subscribe, give a like, press the like button, and also comments to see, for the rest to see what have been the results using this strategy. Well, thanks for listening and seeing you. I would love to see you in the next video. Bye.